Good afternoon, traders. Thanks for joining today's guest speaker webinar. As always, my name is Keith here with Shark Indicators. We've been involved in the NinjaTrader ecosystem since 2011, providing tools like Bloodhound and Blackbird that help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and this webinar is part of that mission. Before I pass it off, let's take a quick look at the risk disclosure. Futures, foreign currency, and options trading contain substantial risk and is not for every investor. Julie Wade joined the Shark community in 2014 and uses Bloodhound and Blackbird to build custom trade logic in NinjaTrader. Her methodology centers around custom range distributions, volatility within those distributions, combined with higher time frame trend, momentum, and linear regression. Julie has recently been learning to apply option order flow techniques to her methodology in order to confirm directional bias and volume levels. So with that, Julie, I will let you take over, unmute, and share your screen. We can get started.
I appreciate your coming, and thanks, Keith, for letting me give this presentation today. The little symbol here, X, squiggly line in the funny characters here, that says that X, the unknown factor, follows a normal distribution with a mean. That little symbol is the mean and two deviations around the mean. So that's really my world where I've been living for a little while now. As you guys know, I talk incessantly about this. And it is a good world to be in because this tells us where 95% of the range will be on any time frame that we're wanting to look at it. And so we know when the price is inside the range or it's moving outside the distribution. And so that answers X, what the little indicator that we've put together. So it tells us where we are in relation to the bell curve and likely where it might be going in relation to the distribution of that and the slope of the volatility. So I appreciate again that you came. And so we'll take a look at this so you can see it for yourself and maybe some Bloodhound techniques for using Bloodhound with the indicators and finish up with a short Q&A. So here is the bell curve. And why should you care? Why am I even bothering to do this? Statisticians will tell you that they refer to the data in this 95% range of these two standard deviations around the middle of the curve. So if I get the annotate out and the spotlight, I can show you that that middle part is the 68% of the distribution, and that's where the data stays most of the time. 70% of the time it's going to be around the mean. Once it breaks the one, it's going to be, the next stop will be to the 2. So that just fascinated me. And once I wrapped these little concepts around my head about where we were in relation to the bell curve on a particular time frame, I realized that we could do a lot with that information. And that's how I started structuring my trade plans around where I was in relation to the standard deviations, and were we, exhausted at the ends, still moving out or coming back in, going back to the mean, launching from the mean and going out, that 0 to infinity type of concept. So now that you're up to speed where we are in relation to these statistical levels, let's look at another slide that will allow us to take a look at how I apply it on a trading time frame. I came up with it to put myself inside the middle of the distribution on the open. And so this 8:30 to 9:30 time frame tells me the 68% of time where that middle is, that price will stay inside of that. Once it breaks the 1, where does the next level go to? That would be the 2 and the 3. So here it went from the 1 to the 2 and the 2 to the 3, and then it started going into your tails. And so my indicator allows me to plot these on the chart so I can see in real time where we are trading in relation to the last 14 trade sessions. The high and low of that range is now represented as a bell curve. So using the simple probabilities of that 34, 68, 95, I can rely using probability theory that if we break the 1 and there is, slope and momentum and linear regression with that, there's a high probability that you might meet the end of your range, all things considered. I also look at the threshold of the volatility to help me with that determination to see if I'm in low volatility, medium, or high, whether I'm going to reach the 3 or extend out to a tail, or if it's low volatility, it might, return back towards the middle. Just depends on that, momentum, linear regression, and volatility to help you figure out if you're going to be breaking the 3, going to a tail, or returning back to the middle of the distribution. And so basically, how I do this low, medium, high is I take the time frame that I'm going to be trading, and I can project or calculate using the thresholds during that time frame what those statistical levels were over any period that I can select. I can select any time period I would like to examine a bell curve on, and it will let me know what those levels are. And so I can tell in relation to the slope of the time frame that I trade whether that is low, medium, or high volatility. As you see with the price coming up, the volatility was rising, leading you up and out. And you can tell here that in medium or high volatility range for your time period, what precisely points are that you can expect to achieve during that time frame on average. This is just an average. So um, you have a benchmark of what to expect. So medium volatility here, it's kind of hard for you to see. It's 1.15, $1.15 for medium volatility during an 8 to 9 o'clock in the morning time period when I took this screenshot. So I would be able to project also where that $1.15 was from the open or from the PT1, wherever I would like to project it from. I can do it from the open of the bar that I took the trade on. And I can also use these other levels statistically. Um, again, knowing that 0.58 would be 1/2 of the um, distribution of the inside of the 34, 34, and I could use that as a goal to trade to or as my risk, depending upon what time frame I was trading of the 1 hour IB. So you can model the risk according to what the average was for a time series that you're interested in trading. It could be your time period if you're somewhere else and trade an Asia session or London session. You can model that. You can say what happened between your London session open and the first hour so that you have that range. Statistically accurately what the average was for that range. And make your assumptions based on that. Again, if your volatility is high, you would expect that range to expand, right? And especially if the volatility is moving up and out. So you might be leaning into that, trying to hit your targets, thinking that they're going to get there um, with a higher degree of probability because your range is expanding. So if the range is contracting, um, don't lose heart. That doesn't mean that price stops moving. It just doesn't move out as quickly as it would with the range expansion. And in fact, lately we've been getting shorts on this low volatility, which is just crazy because we had over a decade of these low vol longs. So for this year, we've had to adjust to a new paradigm, which is short vol shorts, also something to get used to. But here is what it looks like, an ideal situation, combining Bloodhound to waiting for price to leave the 1 to go to the 2 and 3, like on a time frame that you select. So this was the 8 to 9 o'clock hour in crude. And again, you can take trades from the middle of the distribution or out. From the middle, you would need another indicator. I don't plot the open on the distribution because I use other indicators to do that, but I use the bar, for instance, um, and you can plot it off the bar open. Um, so I think you're going to like getting a new concept of trading this. These boxes can be measured, and that's what I'm trying to show you with the rectangles. And you can move your inside, like your first standard deviation, and use that as your risk quite successfully on a lot of time frames, especially the higher time frames, and see where price might be trading to by using the inside the first standard deviation of a daily range. You can project that out onto a higher time period, or excuse me, the opposite end of the distribution, like on a project it from the third tail or the PT3 out into the tails to see where price might be going. And I'll show you a little bit of that with some live charts. But just realize that using a quantitative method of using, what statistically average ranges can be a good methodology to consider adopting. I'm certainly enjoying it. If you are interested in the indicators today, I am having a special limited time offer and through July 1st. So consider getting them. I'm shifting away from the subscriptions, and those who are in a current subscription may continue on that if they would prefer, or if you would like to transition over to a lifetime license, here's a good opportunity to do so. I will have this available through the July 1st. And if you aren't able to participate fully by the 1st of July, don't worry, I'll be having another Shark event at the end of August. So I'll offer the same prices at that event as well. So I'll have a twice opportunity this year for a limited offer. Okay, and if you are interested, come over to the website at J Auto Trading Strategies, look for this tab right here, and it will tell you about the indicators and how to check out. All right, so with that, let's look at some charts. The indicator has several components. You can put plots on the chart representing time frames, and that's very instrumental because higher the time frame one that you're breaking and running, the better. So you can see the progression going from a Globex or a 1 hour IB range to a daily to a weekly. And that weekly one acted as resistance today and then finally broke and got up to the top of the volume profile distribution and sort of flattened out at one of our tails, pretty exactly our quarterly. Right to the tick, and then pulled back. This white line up here, the thin white line, that is a monthly one. Got it confused earlier today with the weekly. There's so many lines on the chart, I'll get them mixed up. But this monthly one will definitely act as support resistance if it gets that high. And it's a good sign that we parked price above the weekly one. That's indicating that they're going to try to get in and fill this donut, this double distribution, but they're going to have a hard time at that monthly one, is my guess, if it makes it up there. And if my hypothesis is correct that we're in a bear market, then they're going to be hitting that defending sell calls, right? That would be the call wall. So you can confirm this through going to the CME website, looking at Quick Strike, and taking a look at their matrix for volume and open interest on the option contracts, and also look at the CME website for volume and check to see if there's any futures sitting up there also. And check your DOM to see if there's any orders sitting up there for volume. But my guess is that you will start finding that volume start stacking up there if it's not already. So I've got a bunch of charts set up for us to take a look at. I guess I should start left to right. Here is a 180-minute chart of the ES. And again, I'm just showing different levels. This green is a monthly 1 month. And so there's your monthly sitting on the JP Morgan put line that got broken. So I think I found where they parked that put. Here, this is the wrong contract. Hang on. It might be on a different chart. It's over here. Here it is. It's this monthly tail, 1 month, and it's my second tail. So that's probably, they've moved that put wall right below that, would be my guess, if I were to guess. They're certainly not sitting there waiting for price to jump back over there, but, you know, I guess stranger things have happened. I would have moved it. Well, it looks like that's why the price bounced where it did. But normally on your quarterlies, Make it real thick so you can see it. Right there. That is where your support resistance is. And do you see the PT3 here? That is the monthly one. So price has really fallen below these levels. And so we are definitely in a bear market. They have blown through the risk. And so everybody's either had to adjust their risk by moving it out, and or price is going to have to be rallying pretty hard through next week to get back above these levels. So the options work that they have to expire at the end of the month above the level. It doesn't matter that it dipped below it before the end of the month, as long as it moves back up into above the level. So we'll see where price is in relation to these levels by the end of next week, and see. My guess is it's going to go higher. Yeah, they're certainly not going to let it go below 36.10 would be my guess. Crude is below the quarterly ones, and again, that looks good because we want it to start moving down because of the high price of gas and oil, but most likely it'll move back up inside those ones by the end of next week, so that their risk is not in jeopardy for their options on their quarterly contracts. So that would be my guess. That would be going back up inside. And gold, crazy gold, that is no longer a store for inflation all of a sudden. Like I said, it hasn't been all of a sudden, but pretty recently it's just absolutely failed as a store of value. So it is just hanging out, still inside the one, but I'm, you need to watch this closely. It'll probably move up a little bit, would be my guess, also for the end of the quarter and end of the month. So I would expect prices to start rallying a little bit because of that, end of the month, end of the quarter situation. Here is the what I like to do to measure my ones. Is measure half ranges and full ranges and take these extensions below certain value areas and run them to see where price is likely to go if it breaks these ranges. Look at that, a 1.5. The market is extremely quantitative on these moves, and I have been having a degree of success by dividing the range and using the middle of the range to project where price might be going on an intraday basis in NQ. And let me find the chart where I can show you that. So here we go. So on this chart, I've got the opening range indicator with the PT indicator. And the opening range indicator allows me to use the session open that I'm working on. And for instance, this is a Globex open, and the orange is the RTH open. And so I can separate these opens and use that as the basis for running some strategies, and use it also to copy my boxes, my rectangles. So if I draw half the distribution between the ones, I can extend that range above or below where I'd like to see it in relation to the Globex midband, or one of my PT levels, and project that it would be an easy target to reach. Or above and below, and or just use these half ranges as the risk for the trade that I'm in, to trade to that and then take profits and stop. And so again, you're using a quantified method. So if you were taking this from the high of each high and trailing it from each high, you can see that you would not have been stopped out. It would have held the trade. And you also, if you ran it from each swing low, you would have gotten your profit target if you picked the right direction. So that is what I've been doing and working on. So using these ranges to trade quantitatively by using the value of inside your first standard deviation to set the range. And I'm able to do that in Blackbird, which is wonderful. So you can do the same concept on any time frame, from your 15-minute range to a 1-hour IB, and or a daily or Globex or London session, whatever you want to run your calculations from. And so you can create your own curves and decide whether you want to move when the range is expanding or contracting, and put that into your bloodhound mix. Or you can also say that you want to just wait until you break out of a Globex 3, or know that you're trading inside the Globex 3s, or inside, your 95% range, and what volatility level, because that volatility level really significantly impacts your trading. You can exclude trade considerations after it breaks a certain level, because it can get so wide, the volatility, that it wrecks algos. If it's costs $10,000 to go from high to low to find out if you're even going in the right direction, that can obviate an algo very quickly. So you can control the volatility, requiring that it stay in a normal threshold, as well as stop trading once it reaches a certain threshold. Say if it stays within a standard deviation outside the PT3, you can just stop it at that point. Any further signals from coming through. Or you can just if you're trading yourself, just take your profits at that point. If you know that the percentages are a high percent that it will come to these levels and flatten out, you can just take your profits. Price doesn't always RTM snap back immediately. Sometimes it'll just sit on a level for a long time until the market closes or flatten out. It doesn't always just bounce and reverse on these extreme levels. So I always find it better just to trade to target. And then of course you might have a separate algo, something that you've keyed up to trade out of bound reversals. But as far as a stop and reverse system, I haven't used it like that. I just use it trade to target. But again, you could design whatever you would like to do. Certainly, it's easy to capture these in Bloodhound. You can get different ranges. Let's see. I can't get to my little bar. Here we go. So this is a 60-minute range, and I've just got it coded to wait for the breaks of the 1. So I'm looking specifically to go from the 1 to the 3. And so here it was 36 points, target reached. Here we got to the 2, and then it went up to the 3 on the next 60-minute distribution. Each of these distributions are 60 minutes. So just because it doesn't reach your goal on that distribution doesn't mean that you necessarily need to close your trade. It can go up, continue moving up. Here is the 1-hour IB range. Kind of had the choppy price action going in and out of the range today for the 1-hour IB, but here's your ideal 1-hour IB. And like what I was trying to tell you when I was envisioning this, if you leave the open, here's an opening drive example. It never came to the bottom end of the RTH 1-hour IB distribution. It just moved forward and went all the way up to the 2 and the 3 and to tail 1 and 2 before coming back in and then flattening out. So that was a good session. Here was another good range breakout. And again, the goal for this is to go from the 1 to the 2 to the 3. These are the 1-hour IB ranges. And these were this week. I mean, this is very current price action that I'm showing you. That was a crazy one. Here we came down. Nice. 1, 2, 3. Target reached. And again, you're looking for, in this situation, 94 points. And it got a little bit more. So it tells you, where the football field is and where you are in relation to the 1, 2, 3. And just having this in your mind of what the opportunities are. Now, I'll, granted, have higher time frames on my chart. So I'll have a daily 1, 2, 3 on my chart also, always wanting to see what that daily distribution is, because it will also trade these daily 1, 2, 3s. In fact, it went up to the daily 3. So leave the 1-hour IB go to the daily one, leave the daily one, and then you're going to the daily 2 and 3. So it's sort of like a progression. I do the glowbacks too. I'll show you that in a second. Here's the daily range, and I have this coded a little bit different. I have it coded going from the daily open, the glowbacks open, as well as the one. So just, I'll give you Bloodhound template with some examples of how to use the comparison solver and see. Here we go. How to put the JATS indicator, the PT indicator on here, and how to see what the examples are to use the higher time frame daily value and what range settings to put it on, and how to put your Bloodhound templates together. So I'll have some examples already coded up for you, as well as showing you that slope. Here's the Globex range with a linear regression, just to show you the linear regression indicator. It's nice to be able to either use a regression channel, which I like to use on a Unirinco chart, or I like to use the linear regression indicator on a minute chart. And the way I have created my linear regression indicator is I have offset my main levels with linear regression channels above and below the main level. And that gives me also another football field by using ATR from the linear regression in a channel. And I have noticed that price responds a lot to my offset of my main trend line. And that clues me in that I might be at an exhaustion point when I get to the end of my linear regression. That doesn't mean it might not be the end of the move. Like here, it kept going, but eventually it finds its way back to the mothership, back to the main trend line. So when you put the combination of the PT indicator levels and have the confirmation that you're also out of bounds to your main trend line, and put those two concepts together, you have more confidence when that BB mom starts crossing up on these lows. And here is your target going back to your main trend line, and or here you're going right for your middle of your next distribution and or your PT1. So I like mine, using linear regression and momentum to help trade the bell curve. I also, you've seen me with charts using the volume profile from NinjaTrader, and that is wonderful. But you have to have the lifetime license to get that with NinjaTrader. It's a NinjaTrader indicator. It's available if you get a lifetime license with NinjaTrader. They have an order flow package, volume profile, VWAP. And I'll put the VWAP also on the chart and the volume profile sometimes. But my little methodology of running linear regression and momentum with this really helps. I show the linear regression on the market analyzer also. I have customized the market analyzer to show fast super trend momentum and a linear regression and trend. And that helps keep me focused on a direction, especially when price is going crazy up and down, which directions I should be trading in. And this is the key to everything. I can also import my levels again to my market analyzer, and I'm very confident if I'm trading a 15-minute chart what to expect in that time frame for the RTH session. On the lower time frames is the custom time series of the first 5, 15, 30, 5, 15, 30, and 60 minutes of the session traded over 14 periods. And this gives me that medium, low, high vol benchmark that I need. And if price is hitting my levels, if it's low volatility or medium volatility, then I'm going to be looking for a 1 or a 2. I'll be looking for 36 points or 72 points in that 15-minute time period. If it is high vol, then I'm going to be looking for 101.75 points. So I've got my little cheat sheet right here, and I use this constantly. I'll get my ruler out, and the first thing I like to do is see where my figures are, the calculations, relative to where something is on the chart that I want to trade to. So I'll get the ruler out. Where is the, hang on, my ruler. And measure. So here was the high. Here was the PT1 level. And move this out of the way. PT volatility was going up high at first. So during this section right here, I would have been looking for high volatility. So I was looking for those 100-point moves. So if you put if you're looking for longs, for instance, going from the low to the high for 100 points, and you take your profits. Profit reached. And that, look at that, from the low to the high of that bar was 100 points. Do you see that? Right here. $100. It's amazing, huh? And that is how I can calculate this to look for profit targets in Blackbird, because I can set these threshold levels going from the low of the bar, the open of the bar, the close of the bar, the high of the bar, wherever I want to put it. Okay, I can run it from any location. If you can put this on an indicator too. If you want to bounce one of these levels off of an indicator, you can do that. If you wanted to put it on a 8 EMA or something like that, you could run the calculation from there. If you wanted to run it off the Globex midband, you could do that. I'm on my opening range indicator. So I can take the opening range during a time session right here, and it will print the mid band of that range, like right here's the middle of your Globex. So I could put my statistical level above or below that midband of the Globex midband or the RTH midband in an RTH session. So if you want to do a 60-minute range for the RTH session, so this is the high of the 60 minutes. So if you wanted to run your calculations from the midband instead of anywhere else, you could do that in Blackbird. Target reached. So you can set your location to take these ranges from, and then maybe you wouldn't want to use the entire 100 points for risk. Maybe you wanted to use a PT2 for risk, so you can mitigate your risk on the back side of that. Or like I said, you can just run it from the low of the bar and trail it, have it take your profit when price reach the top end of that range that's statistically based. And you don't always have to go for the highest amount, right? Go for your low-hanging fruit. If you're in medium volatility, you might want to do a PT1 target so that you know that you're going to take your profits. Do something like that. Something that's low-hanging fruits that you can be hitting your targets. And so that's what I'll hope to help train using the indicators with Blackbird and Bloodhound. I'm not selling algos. I'm just showing you techniques to use it so that you can run your own risk and you can run your own strategies. I develop my own strategies, so don't tell me what your strategy is and don't ask me to help you design one. But I'll help you show you how to use it in Bloodhound and Blackbird so that you can use it for yourself to develop your own. And I'll show you the solvers and things that I use and how I use it with it, and give you an example template that I have prepared for you with these samples. And these are just samples. It isn't meant to be an algo. But I'll have to modify this a little bit because I am using my opening range indicator and my linear regression indicator with this sample. So if you only get the PT indicator, for instance, which is fine, I can take out the other samples and just show you what it would look like waiting for it to break the 1 so that you're only going from the 1 to the 2. Because if it leaves the 1, right, where's it going to go, right? It's got to go to the 2. I was like, oh, they're so funny. So knowing that the 1 is your risk line is something, a concept that you're going to have to sink into your head. And it's like, which one do you say is the risk line? Well, I always say it's the higher white line. It's the higher one. So like right here, we had the weekly one, and I tweeted out this morning, this 11,740, right? That is your risk line. That's where them dealers are going to come in, and they're going to use that as their 68% because they're doing options a lot of the time, and so they want it to expire inside the ones inside the 68%. And so understanding these concepts will help you also. So if you're outside a daily one, for instance, you have a much higher probability of reaching the daily 2 than you would from a lower place inside the ones in a distribution. So it's hard to plan for a trip going outside of the daily ones until you really get to the outside of the ones and start moving that way, because that is where that line will be defended. especially especially on a monthly or a Globex quarterly, excuse me, monthly, quarterly, weekly. Um, the weekly is defended a lot, but the daily can be also. And when you see that these start running and breaking, um, you're just looking to go to the most common tail location and or do like I mentioned to you, and that is take a rectangle, I mean, very scientific, right? And go from the mid-band, the middle of your range, to your outside level and just project one time, above and below that. Let's see if I can grab this and just shoot for these targets, and or just use the PT levels that are on the indicator. And I'll show you how to take targets, profit targets, using the PT indicator, using Blackbird, but just using the indicator itself. And that's how I use it. I use it to trade to my targets, just using Blackbird to close the trade once it hits the level. But when you're inside the ones like this, trust me, them dealers are looking for theta to burn, and they just want it to go up and down inside their white boxes so that their options expire worthless and they collect their premium. If it breaks the tail and expires outside, they've busted their range. They don't really care about the calls as much as they do about the puts. They don't like busting their puts. So that was a big flush day. But you'll see and notice how often they keep it inside the 78, 68%. And that's why you hear so often over and over and again that price will just, trade inside that 68%, because that's how the world is structured for them to, I think these are daily ranges. A second, let me put the weekly on here. Daily. Yeah, I need to show you the weekly. Here we go. So now you can see that they really keep it inside the weeklies, right? They're just burning their premium, right? That's what they want to do. They just want to keep it inside the ones. All that. They're just burning their premium. Happy, 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 happy. And then it breaks. And that's when they freak out, because that's when all the hedges are getting broken, right? So knowing where you are on these football fields, especially if you trade the indexes, is crucial for you to understand what's really happening in the market and where you are. And right now, we're trading back above the ones. And that was in large part due to the end of the month quarterly coming up. So they wanted to keep it off of those bottoms for that reason. So let me get into some questions and see what y'all think. If you understand it a little bit better. And I know I show a lot of lines on my chart because I have, open and closes. By the way, the range has an open and the range has a close, and they're different levels, and the algos go to both of them. So if it doesn't get confusing enough, you'll see that I have glowbacks and 1 hour IB and daily and weekly and monthly and quarterly and all that. Um, so anonymous attendee is asking me to tell them about my proprietary algos, and I just can't do that. I can tell you that I'm enjoying measuring the ranges and incorporating them into my strategies, and I'm having a lot of success with my testing. So, or I wouldn't be out here talking about it. It would not be happening. I'm very happy with it. So in NinjaTrader, I can backtest using Blackbird. You can grab, if you code, you can grab the plots. The plots are exposed, but not the code. So you're not going to see my proprietary code for how I prepare it, but you can access the plots and code a strategy to use the strategy analyzer. Or you can use the strategy analyzer if you create your own cheat sheet through it without coding, but I use Blackbird. And I can just import my levels through Blackbird for accessing the time frame levels that I'm interested in using the risk for. And I like using, that standard deviation of whatever time frame I'm trading on as my risk metric. And that's what I'm having a lot of success with. And I use, Blackbird. The indicator on the bottom is my BB Mom. I have the volatility indicator PT2 expressed as volatility, where I can get my volatility points for these ranges on either the time frame of the bar that I'm using and or a custom time frame. I can set this up so it shows me precisely a time range. So let's say that we want to trade the last hour. Um, 14, 15, let's just say 1400, oops, 1500. So the last hour of trading for low, medium, and high went from 43 points to 86 and a half to 121, 43.25, 86.50, 121. So I know, snap my fingers, what the range to expect in the last hour of trading. How about that? So let's take a look at it. So from 1400 to 1500, let's see how much it went. Here's 1400 and here's 1500. 113, and it went above 86, almost to 121. So, but you can see it went right to the target and stopped. That's a Globex level right there, the blue. So it went to target almost to the top of the range. Not quite. But that is why I don't go, even though I have the approximations. You can take a percentage of that. So keep that concept in mind. You're not restricted to using 100% of the low, medium, and high volatility. You can actually say, well, let me take 70% of that, or let me take 80% of that, or let me take 40% of that, whatever you want. maybe you want to use 50% of that range so that you can, hit the side of a barn. You can use a percentage of that in Blackbird. So I probably would have been trading the PT2 anyway, the 86.50. So it would have been target reached for me if I had been looking to go long from that low, 86.50. There's 78. And here's 86, 87. So 86.75 right there. Target reached. So you can trade it like that and have the indicator take the trade to the target for you. All right, guys, any other questions? That's about it. And I see that we're right here at our 4 o'clock or 4 Central, 5 p.m. Eastern. So with that, be sure to check out the website. The sale will be up until July 1st.